Today I want to talk about something I am calling allocation discovery. So obviously with the Bitcoin spot ETFs that got approved and have been very successful for the last 2.5 months, we've seen a move towards what we call price discovery. Price discovery is nothing more than those that want to buy, those that want to sell, are figuring out at what price Bitcoin should be. And now remember, with the advent of the spot ETFs, or the approval of the spot ETFs, we've kind of taken Bitcoin out of the hands of only the early investors and believers and the only holders and those that have 80% of their wealth in Bitcoin. We've also kind of taken it out of the hands of the speculators and the traders. And now what we're saying is this is a viable asset class. This is a viable part of a portfolio. And how do we know we're seeing this? One is because what we're seeing, I think, is more people that are kind of new to Bitcoin exposure getting, maybe anywhere from 1% to 5% allocation within their portfolios. This is a real investment now. This is a real allocation. This is with the help and guidance, hopefully, of financial advisors that go, we're going to put money in here, we're going to hold it for a while, and they talk to their clients about what to expect. They talk to them about volatility. So speaking of volatility, we recently had about a 20% drop in Bitcoin prices, and we did not see outflows from the major ETFs. We did not see BlackRock and Fidelity and Bitwise and Franklin Templeton and VanEck having outflows from the ETFs because of the drop in price. So that tells me that investors, hopefully, again, with the help of their advisors, understood the volatility, understood this is a long-term investment, and said, we're going to allocate a small percentage of our portfolio to this. And we get that we're not going to get shaken out by a little bit of volatility in Bitcoin, a downward move in Bitcoin. And I think that's really important, because that gets us to this idea, as I said, of allocation discovery, of financial advisors getting comfortable having the conversation with clients, having the conversation about Bitcoin exposure, what it means, what the long-term viability means, what the investment theses are, and the understanding that there is going to be some volatility. We're just going to deal with it. That's why we're only allocating a small percent. A 20% drop in a 2% allocation does not mean a whole lot for your portfolio. Don't call me and complain, and don't ask me why Bitcoin is dropping, because it's not significant to your portfolio at the moment, but we do want to get you some exposure. The fact that we did have that 20% drop after there were so many significant inflows into the Bitcoin spot ETFs, we didn't have a bunch of outflows, I think is going to make people feel a little bit better about allocating within 401k plans, about allocating corporate treasuries, about allocating just in a traditional brokerage account. And maybe what they'll start doing is just buying Bitcoin, not necessarily buying the ETFs, but just buying Bitcoin and holding it and understanding how that works. Again, because we were all excited about the ETFs. We've seen the success when we had a big downturn in the price of Bitcoin. The ETFs didn't outflow. So we didn't have a bunch of the brand new investors into Bitcoin exposure jump out because the price went down. We might see more and more allocation again within those other plans, allocation directly to Bitcoin instead of within the ETFs. What does that mean for the price of Bitcoin? Well, to me, this says that there will likely be steady inflows into the ETFs as more and more advisors learn about Bitcoin, as more broker-dealers and RIAs are allowed to talk about the ETFs, certain ETFs. You're likely to see more inflows, but you're not going to see outflows just because of volatility. Maybe the only outflows you might see are if there are significant changes to the global economy, but I don't see that happening anytime soon either. So you couple that with the halving coming up, the less of a new supply of Bitcoin, fewer people willing to sell, more holders, and the holders are the ETF holders and therefore the market makers. And theoretically, it means the price should go up. Look, if the price goes up, there's more FOMO, more people want to get in, more advisors want to learn about it. And you just have a bunch of people holding Bitcoin, not necessarily selling. Lower supply, more buyers means price should go up. But all of this comes to this allocation discovery. It's financial advisors mainly and large investors learning where Bitcoin and Bitcoin exposure could fit in their portfolio, making it a small percentage, and then being comfortable with what happens with Bitcoin prices within that small allocation of their portfolio. So allocation discovery is following or maybe leading Bitcoin price discovery.